Tech and Finance Intersect. I'm Jen Viechner.
And I'm Robert Hackett.
And we are very lucky to be joined by Brad Garlinghouse, the CEO of Ripple. Thanks so much for being here, Brad.
Thanks for having me.
So you've had a lot of updates this year with Ripple and RippleNet, which is your blockchain that many financial institutions are using. Can you give us an update on what's going on and how they're using it, who's using it?
Absolutely. So I think, Ripple, I think, has been really fortunate in the context of the broader blockchain and crypto ecosystem. We've been very focused on a specific customer set, a specific problem around cross-border payments. We've been selling into banks and financial institutions for a few years now. We've signed up over 200 banks and financial institutions globally. Recent ones we've talked a little bit about things like MoneyGram. We announced a very big partnership with in, I guess, June. They went live in July and August, and actually even in their earnings call in August, we're talking about how they're tangibly seeing the benefits of using XRP to help facilitate their liquidity needs. So we feel really good about the momentum we have there. And even this week announced some partnerships in the crypto-specific area with BitPay, a company that allows you to use cryptocurrencies to check out at like a PayPal checkout or Visa checkout. Now we'll be supporting XRP, and CoinMe, an ATM network that will also be supporting XRP going forward. So excited about both of those.
And if I understand correctly, MoneyGram is actually using XRP in its transactions, which marks a big evolution for you because there are some financial institutions who are using Ripple but not actually XRP. Can you explain how that evolved and how that's going?
So I think, a lot of times, I talk about the more than 200 banks and financial institutions we're working with, most of them sign up and engage us on a fiat to fiat basis. Dollar to yen, dollar to Mexican peso, dollar to Argentinian peso. And that's because that's how the correspondent banking network works today. In effect, some people describe what Ripple's original product and initial product is called kind of Swift 2.0. Swift is what correspondent banks use for messaging to debit and credit the pools of liquidity. And when I say pools of liquidity, I mean like pre-funded accounts. The Bank of Jen and the Bank of Brad would have accounts at each other's banks, and you might be Mexican peso, I'd be dollar, and we debit and credit those with messaging. That works if the accounts are pre-funded. And what we have found is there's more efficient ways to manage liquidity. If you as a bank don't have to put money at my bank and I don't have to put money at your bank, I can use that money for other things. It's working capital. MoneyGram, as an example, has several $100 million of negative working capital. They're a public company. That's material to their business for sure. If by working with them, they can reduce the amount of pre-funding, that is very accretive to how they think about the use of capital and what they can do with that if they didn't have that negative working capital out there.
And if some of the hesitation from some of these financial institutions is that XRP being a cryptocurrency has some added volatility risk as opposed to fiat currency, dollars, pesos, whatever it might be,